Thursday, June 5th, we got something happening. This is Market Analysis, Stan Ehrlich. And I start out with stock indexes and then go to futures and some stocks. We have what I was looking for maybe a few days ago, and generally speaking, for a little while, maybe 2 or 3 weeks. Most of what I need to start screaming bloody murder top. The E-mini made a new high for the move last week. Couldn't hold it. Dropped right back down to the same trading range defined by the low on May 23rd and essentially the high in overbought conditions on May 20th. So on May 29th, made a new high by a little bit and sank right back down to close relatively poorly. Sank a little bit more the next day, but nothing dramatic. Now today, we came back up again and another new high, third one. Well, actually, second new high. But we now have an outside down day, a bearish engulfing. But it's just barely a bearish engulfing. We're only down less than a point. Nevertheless, if we get weaker, and in particular make new lows, and stay lower than yesterday's close on today's close, then you have a bearish engulfing at the end of the day, which is what is needed. They can occur during the day and then reverse, and there's no engulfing at the end, or bullish or bearish. But anyway, this, you cannot erase the engulfing. A higher high, lower low is just there. It's the close that makes the big difference as to whether it's worthwhile paying attention to or not. In this case, a bearish close, a lower close is definitely after a new high for the trend and then a bearish engulfing and almost overbought. Too bad we weren't overbought, but you know something? This is a divergence or even a double divergence. New highs in price, but not a new high in the indicator. Another reason to be concerned about a break, a move to the downside coming, I have to use the word immediately. So if this contains, at the end of the day, a bearish engulfing, and other indexes are basically doing the same thing or even more dramatically, I'm looking for, starting now, again, it hinges on the close, a move down to 57.55 minimum, move down to close the gap 57.14. And I think we're probably going to see 5,600 like I've been talking about for quite a while, and 55.50-ish. And I don't know if that's going to hold. It depends upon how we get down there, how long it takes, what happens in the meantime, gapping, bounces, speed at which, oversold conditions maybe. So, depends. Now, you look at the 1 minute chart, we're dropping pretty quick. We're now down 1.3 on the E-mini. That's pretty quick. Took a minute or two to drop about a point, almost, a little over half, I guess. Getting below 59.57 is really going to open my eyes. There's a reason why, even more so, which could happen any moment. This is getting very volatile here. Something is happening this morning. I'm not a fundamentalist or a fundamentalist, so I don't go out and look at what the news is saying and doing. I look at the way the market reacts to whatever news is out there, because the news psychologically affects you because it sounds like, looks like bullish, but it depends on how the market takes the news. All right, you could have bullish news, and if you had been in a bull market and you had been overbought and the market gapped up, all those technical things mean, watch out, that's the last piece of bullish news. You're going to see nothing but neutral to bearish for a while after that, and that's usually what happens. All right, so we're coming down. And while I'm talking here, we could see some more serious, very serious reversals, but it has to get weaker, and it's heading in that direction at the moment. Next, we have an outside trading range day in the SPY, still hanging on to a little bit of a gain. Delayed data, I believe. Maybe not. Well, let me double check on that. 9:40, 10 minutes worth. So in the last 10, just a minute. Yeah. In the last 10 minutes, it's really gone down all the way down here. Here. We're not showing it because this is delayed. Now we got the NQ. Stop that. The NQ, critically important. Overbought yesterday and today. Today has a new high, and this is also slightly delayed. We'll see in the NQ in a moment what's happening. This is the QQQ. Usually delay doesn't matter. It's only 10 minutes. Today it could matter. So I might want to come back to this after we're finished. Close to major resistance. Another little resistance level extremely close to and overbought conditions. All I have to do is get below yesterday's low, and I'm going to screen bloody murder, bearish engulfing ER signal. It's going to turn red, and I think we have a top to the day. Like I picked tops to the bottom, tops to the bottom, bottoms with green. Another one very close to the lowest low, but often they are the highest high. Not very many on this particular chart. And that was a high for a couple of days. Now, I don't know, but the other circumstances apply if this is going to be a very profound one. I think it is because of the profoundness of the rally up, the profoundness of the resistance area that we are fiddling around in, and the signal might, by the end of the day, be a whopper if it happens. 1 minute chart, coming down pretty good, but again, a little bit delayed. Okay, now, real time. The NASDAQ is down slightly. Overbought. Challenged resistance. Went through it a little bit. Couldn't stay there. It's kind of like the opposite of a ping pong ball being pushed underwater. It pops right back up again. This is kind of like a rocket reaching the stratosphere, losing fuel, and coming right back down again. Yeah, not the greatest analogy, but whatever. So if it gets below yesterday's lows, it will turn red. It will be a potential major sell signal. And I have to say these things before they happen. Otherwise, people won't believe I can see it coming. And you guys, if you've watched me for 2.5 years, know I've done it, will do it, and have, or maybe doing it today. We'll see. Time will tell. We've got the NASDAQ already breaking this daily data low. Now, that's good for my purposes, but I need to get below that low, yesterday's low, 21,640. Then everything goes to hell in a handbasket, so to speak. Next, YM. Outside down day, bearish engulfing in a resistance area, some of my favorite, but it did not get overbought. Therefore, I don't have the red. Everything else is there, plus a little more. So I'm liking what I'm seeing about being more adamant about my bearish thoughts, which, of course, have been not right in general for the last 2 or 3 weeks, but they're not particularly wrong either. The bull market really stalled out. It just developed more of a trading range. Next, again, now we've got to get the YM. Just a moment. Yeah, well, we already have it. We have the outside down day. All it didn't do was get overbought on the daily data chart. So we've got the outside down day on a spike up, 5:25, almost 6 o'clock California time in the morning. And, of course, shortly after that, big break, then a move all the way back up, and now down pretty sharply. But let's see if it can keep going. That is the key here. Next, Russell. Almost an outside down day, not quite, but in resistance, and a series of highs that are at the same or lower, slowly lower levels. And it looks like it's in the process of topping out to me. Now, I see a trend line here that I drew in actually this morning. I find it very interesting, pretty good one actually, off the top of the market way back in November of last year, and a rally high very accurately in February this year. And it did pay attention to the line starting May 12th. Once 2, 3, 4, 5, broke it but didn't stay above it times, and finally broke it, stayed above it since Tuesday, Wednesday, today's Thursday, still above it. But if I get those reversals on the other indexes, this is not going to stay here. It's going to start dropping back below that line. And the more important situation is the support resistance area. It's getting stuck in. I'm trying to justify bearish expectations here. 1 minute chart, not as interesting as the others. Now, bonds. Here's how profound these reversals can be. Now, although I love it when they're at the highest high or lowest low, that's the highest high, that's the lowest low, that's just almost the lowest, but not quite. Trying to find, oh, that's the lowest low way back here. And there are many, 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 many that are the lowest lows or highest highs. Green, red is what you need to look for. So we have 3 of them. Unfortunately, none of them are at the very, very bottom. But that implies to me, and I've said many times, that my strategy, ER signals, although it does pick the highest high or lowest low day, it also sometimes does not. But I get reversals as a group of reversals, generally in the area where the market ends up bottoming out, often. No specific statistics involved. Haven't done that research. But I like it, and I've seen it happen 2, maybe 3 signals. This is 3, very rarely 4. And I am talking within usually a month or less, and this is less than a month with 3. We've got new highs yesterday and more follow-through up today. Momentarily, it's around unchanged, and I don't mind it if it dips down a little bit more. Oh, 113. But very soon, it's got to stay higher and higher and higher. 10-year notes are doing the same thing. Although in this case, they're up into a little bit of a resistance area, and they are a little lower on the day already now. But I still like the fact we got 1 buy signal just before the bottom, a few days before the bottom, which wasn't very much lower. These signals have got to be relatively close to the high. Like that one was right on the high, and I see I don't have a little red circle around it. I should have put a red circle around that. That one's the top also. That one's a minor bottom. That one's a whopper of a top. Oh, you look around on your own. See where you can see the green and red on these charts. So, bullish interest rate futures, expecting to see higher levels. Not necessarily super bullish yet, but this is developing a large double bottom and big long-term bullish formations that have not yet started to break out and started to work. They're just developing, not finished. And they could fall apart. Crude, up a little bit, little trouble at resistance level, not to be surprising. I think it's going to push through it soon. So any close above 64 and a quarter should cause a pop up all the way up to, say, 69.5, and maybe even further. Next, we got an outside trading range day in natural gas. At the moment, it is up just a little bit. Last time I looked, it was down just a slight bit. I would love to see this engulfing end up being a bearish engulfing and, of course, work, because we have a double shoulder, head and shoulder top here. Small shoulder on the left. Rally high, December 30th last fall, winter. Top of the shoulder, January 13th. That's the highest high for the shoulder. Pivot point, one of them, my favorite, almost a flat neckline, very slightly downward slanted. I chose this one also because it's the lowest low since the shoulder started to form. And the lines are pretty similar, not greatly similar, but fairly. And we did bounce off of the slightly upward slanted version. But now we're running into this outside trading range And all I need to do is see it slip a little more. And then I got a bearish engulfing, and then I'd be expecting it to come down, which is okay. I didn't like this rally for a few days, but it is looking like it could be over. Next, we've got heating oil. Doji, not much going on. Favor the upside mostly because of my bullish engulfing that worked for a bottom, and this bullish engulfing that was the lowest low bottom have produced rallies. In both cases, I didn't get a reversal here, but it never made lower lows. So the trend recently, the last 2 months only, is up and down. You know, I got a little pet peeve to mention here. You know, these guys on financial television mention the trend is up, the trend is down, but they never say how long they're defining as the time frame to define the trend. Is it a 1 month trend? Is it a 6 month trend? Is it a 1 year, 10 year? And they don't do it. They just say the trend is up, and that's too ambiguous for me. That's for damn sure. So I just said for the last 2 months, defined it. Now, for the last several months, since December of last year, January of this year, the other picture, longer term, is down. You've got lower highs, lower highs, and lower lows, except for the last 2 months. So is the longer term trend turning up? Maybe. Not quite sure. But I do like it the last couple of months, and I think we're going to see a little bit more rally. Next, gold. Now, silver, platinum, and copper are going to be much different than this. They had this morning, for some reason, a very strong rally, and gold just missed out. It did make a higher high. It does have a bearish engulfing at the moment, which looks like it's going to head south. Keep that in mind, because if the lines don't hold on the downside retracement, then we could see it drop off a lot more, probably all the way down to 32.24. But again, we've got to have a bearish engulfing, stay that way, and start to close below this previous bear trend line, which on Monday we broke it. And we've been up above it ever since. So I'm turning a little bearish at the moment, a little bit more bearish than I was yesterday after a doji. But today it's the pretty much exact opposite. Dojis don't mean too much, engulfings do. Next, silver, a whopping big rally. This is the important part. Silver moved way up and even breaking the highs that were made last October, a half a year ago, plus. A real sharp spike up, I'm sure. It actually opened around unchanged, so there was some sort of super bullish news. But the market is currently trading below the high back on March, let alone the highest high back in October. Remember, if you make a new high for extended periods of time, and I'm saying maybe a month or two and more, you need to close above those previous highs and then have some follow through in order to see the trend continue, in my opinion. This is an example of a bull trap, a washout of buy stops. I'll pull this over for your visual pleasure, and that's good enough. We just broke through it and just immediately ran out of fuel, hit the stratosphere, and pulled right back down. Now, it doesn't have to close lower on the day, although the lower the better. More bearish, in my opinion. And it is now setting itself up for a bearish engulfing ER red sell signal within the next few days. I really doubt that it's going to do it today and get below yesterday's lows. Yeah, I've seen weirder stuff, but it's highly unlikely. What about platinum? Same thing, almost exactly. We shot up dramatically, broke the highs made a couple of weeks ago, broke the highs made a couple of months ago, broke the highs, well, actually it didn't. The highs made 1 year ago, almost exactly, back on May 20th of 24, slightly more than a year ago. The high on that day was almost exactly the same high as today on a huge rally, getting overbought on a spike. That's a double top, and a very, very broad double top at that. Very, very bearish long term if it does keep going down, which is, of course, going to take quite a bit of time and a lot of movement down. And then it's going to end up being a whopper of a sell signal, which is basically a double top in overbought conditions. That's the best I can say at the moment. But I've seen other things that look weirder. You just don't see it coming. But I've been watching charts for 53 years. Used to draw them for over a decade by hand. So, something's happening in precious metals. What about copper? Almost the same story. A very sharp rally, made new highs for a couple of months, couldn't stay up there, and now pulling back down below those previous highs in the last couple of months. The highest high on April 23, and that's the highest high since, the beginning of April. So all of April, all of May, and the first week or so, of course, in June. That's not friendly. That's not good. This is a false breakout up, a washout of buy stops. It couldn't stay above the resistance area that it did get above substantially, and it depends on the close. So watch out here for metal markets. Remember, gold's already got a little bearish engulfing going. Next, soybeans, oil, meal, corn, wheat. Nice rally in beans. Doesn't mean too much. Couple of days worth. What's important here is the support area basically held. I've got to close above 1081 in order to get really optimistic about this. Then I'm going to start talking about the long-term bottom again. But let's see if it can do it. So I'm not super optimistic at the moment. But I will become super optimistic very quickly if we can jump up above 1081. Next. Oversold conditions turning up a little bit in soybean oil. Certainly nothing to be impressed about. Resistance stopped the rally yesterday. Today it's just doing a lot of nothing. I don't know. I just can't justify anything super bullish long term yet. I'd love to. I see the makings of it, but I got to see some reasons for a significant turn up. Not yet. Otherwise, it's just going to drift off lower and lower, test support, and keep on doing damage to any long-term bullish story I had. Next, soybean meal. Same damn thing, except it's worse. Look how many times this thing has stopped at the resistance level. That's pretty incredible. I can basically count here since April 25th. I don't know, April 24th. 1, 2, 3, 4, 5. Okay, and a half. 6, 7, 8. Well, 8, 9, 10, 11, 12, 13, 14. And today, right now, right here. So, will it turn around and slip from this point? Almost exactly this point? Could, has, might. Did it before. Don't see why not. But your risk, if you short it, should be a stop, in my opinion, around 300 or a little bit higher, maybe even a tiny bit lower. Tiny. But around 300. So that's not too much. I mean, 298.70 at the moment. Come on. That's what I call a low risk. I'm sorry. Yeah, okay. Low dollar risk trade, but it's risky because you don't see it really happening. People like to get into a trade because they see it's having started something already. Oh, that looks like a double top, but they're already way down. They need to learn how to recognize them at the point that they're starting to form the formation. Turning points. That's what I'm good at. Next, corn. Oversold, in support. Yeah, we could have a bullish engulfing. And if it gets above yesterday's high, I would be impressed and talking about going back up. But although support is here and we're oversold, which is great, it looks like we're going to bounce. It does not mean we're going to get a bullish engulfing out of today, although we could. So maybe we're going to start a little bounce, maybe not. Not obviously optimistic about it, but I see it coming, but I can't justify anything big. Maybe it'll bounce all the way back up to 450. Whoopee, 11 cents. What are we looking at? Corn, yeah. Which isn't bad, but it's certainly not anything great. And when we get above 465, that's when I get a lot more optimistic. Next, and that's a little late. Wheat, slightly higher, pushing a little resistance. The lows are starting to rise. It's been a 3 weeks or so, medium amount, nothing great. Can't come up with anything super bullish to say. No signals. RSI doesn't help. I got nothing. The trend is down. We see lower lows every month, every few months, but no new highs for any major period of time. And if they did it, like sort of February, it died and then made new lows again. So we've got lower highs over extended periods of time and lower lows over shorter. And that's the definition of a bear trend. Next, cattle. Gapped up, overbought, high and last at the moment. Very strong day, but this is exactly how a blow-off top exhaustion strength happens. It could get stronger. It may make new highs today and even tomorrow. But this is, in my opinion, going to top out very soon. I probably said something similar right in this time frame. This was overbought. It gapped up. It took 2 more days to have a big bearish engulfing and dropped off very sharply for only 1 day, but that was a very good profitable trade for 24 hours. I wished it was a big turning point like this green bottom, both to the exact low day. Yeah, and even that one way back here. So this is the makings of a top. Exhaustion gap, overbought conditions, extreme strength, blow off top. Maybe. A little too soon to say that, but I got to say it before it's too late. Miss Piggy, I don't care. She's stuck between a rock and a hard spot. Pass. Next. 4 stocks. We're currently trading 38 higher at the moment on Shell, Doji, generally speaking, in an area where there's still a gap to close, but there's kind of a double gap here, which is fairly rare. So a really strong magnet to pull it up a little bit more, and we could have a little down move in the meantime. There is a gap slightly below the market at 66.58 to close. So it could come down, close the gap, and turn right back up again. Now, that would be a very volatile day, and it doesn't have a lot of volatility lately, so not particularly likely, possible. I'm voting for up a little bit more momentarily, and voting for it to come up to as high as at least 69.60. So somewhere between 69.33 and 69.60, about, give or take a few ticks, pennies, I think is going to be a top. If we get up there fairly quickly, we'll also be overbought maybe. I'd like to see that. Next, we've got Apple. A little lower, down $1.15 on a $200 stock, no big deal. It's got some support at lower levels, and the key here is that support at 193, a little under 194. Closing below that is going to cause it to drop a lot more, probably down to 170. Remains to be seen, so let's see if it can break more. I think we're starting a bit of a dip here. I mentioned yesterday the high was fairly close to that bear trend line, and now it's backing off a little bit. So we're close to support and close to resistance. So you're trapped a little bit at the moment. And Tesla dropped off very sharply and closed the gap I have been talking about. Done. End of story. readjust a little marker. Ancient history, gone. Overbought condition, gapped up. Exactly what I just talked about on the other chart. Overbought conditions, gapping up. In this case, also approaching, didn't actually reach it, resistance. Took a couple of days and turned around. And here we are a lot lower, about a week later. This is extremely similar to what I was just talking about, exhaustion gaps, extreme strength, and so on. So, the gap is the key in this case, and overbought combined. Well, let's go to Carvana. Another new high, still overbought for like a week now and a couple of days. This is, I have to continue to tell you, dangerous, very dangerous to be long, because at any moment you could have a bearish engulfing ER sell signal, everything will turn red, and probably as a result of that, in my opinion, start to move down to at least 311 and probably more like 293. E-mini has bounced back to barely higher on the day. We've got an outside up day at this moment, but hardly. We'll see where this takes us. I haven't got it yet. I need the close to be lower. Bearish engulfings in the indexes, and then the QQQ and the NASDAQ NQ. I need to get below yesterday's lows, which hasn't happened yet. Those two will have bearish engulfing ER sell signals that will turn red. You guys have a great day and profitable trading to you.